Good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. Low for the markets, actually. It's below the 25,100 mark. And this has exaggerated or aggravated, in the last couple of hours itself. Big pressure coming in across the board, be it Nifty Bank, be it Nifty Midcaps, all of them. In fact, Midcaps are falling in line with the benchmarks right now, which was not the case before.
That's right. So it's an underperformance all across. All of the indices are trading in the red. All of the indices trading with steep cuts, and the cuts have actually intensified in the last half hour or so. We have a lot lined up on the show, some key management interactions. So let's start off with the top headlines. Markets marginally off day's low. IT and realty lead the decline, while healthcare and autos buck the trend. Midcaps trade in line.
Midcap IT leaders slump following first quarter numbers. Coforge reports a miss on margin expectations. Persistent systems revenue growth and deal wins disappoint.
Shares of IEX slump in trade as the Central Electricity Regulatory Commission approves market coupling in the day-ahead market in a phased manner. PTC India, promoter of one of IEX's competitors, tells CNBC-TV18 that the announcement will be good for market and HPX will be able to gain market share.
Mahanagar Gas, the stock is under pressure for the second straight day post the quarter one numbers. Management points to moderate volume guidance. They expect high single-digit growth in volumes in FY26.
Natco Pharma makes a cash offer to buy out minority shareholder stake in South Africa's Adcock Ingram Holdings for approximately 2,000 crore rupees. The transaction aims to give the Indian generic drug maker a significant strategic footprint into South Africa.
All right, those are the top headlines. We've been talking about how midcaps have been underperforming, and for the larger part of the day, they have been underperforming at the day's low currently. A lot of stocks reacting to earnings as well. We had Indoco Remedies, then we just got Indian Bank and Canara Bank's numbers as well. We'll discuss them in greater detail, but it's a lot about overall markets, really. Everything reacting to new. Look at that, Indian Bank, actually, it spiked to the day's high, 2.5% there. So is the case with Canara Bank.
And VMart Retail, you just saw that spiked up almost 10%. But these stocks and a whole host of other stocks is what Hormaz has. This is our special segment, Midcap Movers. Hormaz is standing by the wall to take us to the midcaps moving around in the session.
You know, it's an earnings heavy day when you get 10 numbers in 10 minutes. And that was a very quick delivery as well, if you could call it that. We'll start off with some positive earnings reactions as we speak, since there have been a lot of reactions. Senor's Pharma is one of them. Look at Force Motors at a record high now, 15% higher on that stock. Remember, we addressed this in our Midcap Microscope segment in March of this year. Thyrocare 2 is up 11% and PNB Gills surging 9% to the after its results that came out yesterday. But there are a lot of negative earnings reactions as well, mostly dominated by two names, Persistent Systems and Coforge, and as a result of which Signity Technologies too has taken a bit of a knock here, 8% lower on that stock as well, and DAM Capital at one point was down 9%, has recovered slightly from the lows but still trading 5.5% lower. The newsmakers of the day, of course, can't not talk about IEX, 28% lower now on that stock. And in the flip side, PTC India, which owns a stake in IEX's rival HPX, is now trading with gains of around 4.5%, and MGL, after a marginal cut to its guidance, has now taken a bit of a knock today, 4.5% lower. Stocks that are bucking the trend today on the back of very strong volumes. Take a look at Vijaya Diagnostics, 7% higher on that stock. Take a look at Gravita, Ipca Labs, and see the spike in Electra Greentech in just a few minutes on very strong volumes, 11.5% higher on that stock as well. And lastly, stocks that are at a 52-week high in today's session. Paytm continues to grow from strength to strength, 3.5% higher today as well. KIMS is one of them. Tilak Nagar Industries, after the confirmation of the CNBC-TV18 news break, 6% higher, and Datamatics too, up 10% yesterday, adding another 10% in today's session. Back to you guys.
All right. Okay. So a couple of those interesting names there. And of course, we'll keep tracking and analyzing that market coupling news that has come by, the impact on IEX, what happens with the other competitors as well. But there's one stock which is on our focus or on our radar today. That's Jayaswal Neco. Nigel is joining us now to give us the analysis. Nigel.
Well, that's right. Jayaswal Neco, that's the one that we're focusing on, and it's buzzing on rather very, very large volumes. So just thought we'll explain a few factors about it. Now, there is an ARC that has a large part of shares in the company. The total number of shares are around 25 crore. And if you look at the action in the last 10 days or so, they've been gradually reducing their stake. I just looked at the kind of volumes that we have seen today. It's massive. The total number of volumes that have got traded is very, very large. And that if you look at the delivery-based buying as well, that's close to delivery-based action is close to around 40%. Just keep in mind, besides the ARC that has a very large holding in the company, the total promoter holding is close to around 55%. And most of it is pledged as well. So just keep that in mind before we move forward. But, to come to the next point with regard to Jayaswal Neco, their operational performance actually has been steadily improving as well. So if you just look at the total EBITDA number, that's been gradually improving. If you look at the margins as well, from around 10-11% or thereabouts, it's moved to around 20%. Even the absolute numbers have improved. How has this happened? Well, all their iron ore requirement comes in from captive sources. They've gone ahead, they've upgraded the system out there. Their blast furnace capacity itself has got upgraded. And also because of the modernization that they have done, all this is contributing to margins moving up. And if you look at the EBITDA contribution on a quarterly run rate, from roughly around 300 crores approximately, from around 120, 130 crores, it's moved to close to around 300 crores approximately. So very quickly, just to look at the debt number, that's come down as well. The interest cost as well has come down. So it's not just the EBITDA improvement, it's the interest cost reduction as well that is heartening out there. They did close to around 1,000 crores of EBITDA. Let's see whether or not they can do better. But just wanted to highlight this. It appears that ARC selling is gradually moving out of the way. Back to you.
Thank you so much, Nigel, for joining us and giving us a sense of what exactly is transpiring as far as Jayaswal Neco is concerned. But we have a very important conversation lined up. Harish Saran, the MD of Hindustan Power Exchange, joins us now. Thank you so much, Mr. Saran, for joining us. First up, we want your initial reaction as to how exactly, now since the order of market coupling has come, what is the current market share you enjoy in the day-ahead market? What is the kind of market share that you aspire to be? We also had one of the promoters, PTC India, sounding quite bullish, saying that a 33% market share is not really off the table.
Yeah, so the Honorable Commission's order, which has come yesterday on market coupling, is a forward-looking and say that it is basically a strategic reform that would lay the foundation for a truly integrated and efficient electricity market in the country. See, ultimately what would happen once the coupling takes place, the discovery of the prices in the exchange would be uniform. So by enabling the uniform price discovery across the exchanges through a centralized algorithm, market coupling will ultimately foster competition. It will also give way for optimization of transmission uses, and further it would ensure fair and transparent access for all the participants. As far as the day-ahead market is concerned, because of the liquidity issues, we don't have much volume in that segment right now. But once coupling takes place, I think then it would become uniform for all the exchanges to go to the customer, and whosoever provides the best services to the customer would gain the market.
So, Mr. Saran, right now the market... Please go ahead.
Yeah, and moreover, this reform is also critical because we are moving towards MBED, market-based economic dispatch. So this coupling would help realize this vision of a single national merit order and improving overall system efficiency.
Yes, exactly. So since it's moving towards efficiency, it would give chance to more players to enter the market as well. What would it mean for HPX in general? How much market share will you be able to increase? You said it's almost nil currently. PTC said that 33% is something that you can achieve. What's your own target for that?
Yes, I think once coupling takes place, that would be the minimum target which I am looking for, 33%.
Okay, Mr. Saran, what we want to ask you is on the competition itself. As far as IEX was concerned, we understand that they were charging close to 4 paise per unit and they had close to 100% market share, like you yourself alluded to. What are the charges that you are currently charging customers? What is the kind of discounting that you can provide? And what is the kind of market share shift you can expect come Jan 26?
See, all these things will be, we will look into details and see all these things are going to be discussed in the days to come. And ultimately what I have told you, because I spent a lot of time in power trading, I have an experience of almost 26 years of power trading. And there people also say that margin is the game changer. But on the basis of my experience, I think that it is not the margin. At the end of the day, consumer wants services. Those who provide them the best services, because in the country we are having a segment which is known as C&I customers, and these are all very small players. They don't have so much of infrastructure available with them to do all these work. So as I said, whosoever is going to provide the best services to the customers will win the game.
Right. Mr. Saran, a couple of counterpoints. Number one, as far as the pilot study itself was concerned, we understand that Grid India actually did mention, saying that customers at this point of time weren't really dissatisfied with IEX's services. And in fact, they did mention that they don't see any significant gain arising out of market coupling. The other question that I want to pose to you is, are you ready with the technology in case, market coupling is implemented from Jan 2026? Are you ready for the price discovery to happen at your platform? So that is the more important question. And thirdly, the RTM market, what is the outlook there?
So as far as readiness is concerned, I am sure that we would be ready by 1st of January 2026. And moreover, we have some time in our hand. And right now also my technology is, I will vouch for it, that it is one of the best technology which is available in the market. So as far as readiness is concerned, I don't have any issue about it.
Okay. Mr. Saran, when we spoke to PTC, they indicated that right now HPX is contributing around 10 crores to them. The more focus on PTC also because it's a listed stock, so the shareholders would be very interested in that. If and when you achieve 33% market share, how much more will you be able to contribute to PTC in terms of financials?
That again depends upon the, what market we are going to have and what dynamics we will be seeing in the future. But ultimately, the growth of HPX will certainly result into growth of PTC, because PTC is having almost 23% share in the exchange.
Okay. Mr. Saran, a couple of questions. We understand that there is a certain restrictions as far as ownership of platforms and exchanges are concerned from the promoters. We understand that there is a 5% upper limit. So a lot of your own promoters actually own in excess of 20%. Would that need to come down? And the second question is, do you feel that IEX can now take this particular or can challenge this particular order from the CERC? Do they have any legal recourse?
That I would not like to comment, because this order has come just last evening.
That's right.
And we are in the process of meeting stakeholders. So as far as IEX is concerned, because it is for them to decide what they would like to do. But as per the power market regulations, any entity, any trader which is having more than 5% share in the power exchange, they cannot trade. So they will have to bring it down.
Okay. Got it. Mr. Saran, it was a pleasure speaking with you. Thank you so much for joining us with the clarifications, with your analysis of this particular order that has come by, and also that HPX is looking at a 33% market share post the implementation of this new CERC note that has come by for market coupling. We'll slip into a short break. When we come back, we get chatting with the management of Supreme Industries on their Q1 earnings. Stay tuned for that. Welcome back. Let's talk about Supreme Industries. The stock is on our radar. Company reported a weak set of Q1 earnings. The net profit and revenue have slipped below street estimates. The stock, though, has recovered after that sharp fall that we saw. Let's talk about the management guidance going forward. MP Tapadia, the managing director at the company, is joining us now. Mr. Tapadia, good afternoon, sir. Thank you so much for joining in. It's been lower than what the street was working with in terms of estimates. Can you give us a sense of what led to that revenue decline of 4% in plastic piping segment? Profits have fallen as well. How much of it is attributable to the pricing of PVC? And what is the outlook going forward? Do you maintain your guidance in terms of revenues and margins?
Good afternoon. In the first quarter, our business was affected by piping division by two reasons. The rains came 20 days before the normal season, so the agriculture demand was contracted, and there was 7 times price variation in PVC in a quarter. That is resulted in some inventory loss. For the full year, we still maintain that our turnover may be around 12,000 crore rupees, and our operating margin will be between 14.5% to 15.5%.
So you are maintaining your guidance, and that is something I think the street has liked as well. So the stock has recovered from the lows. What about pricing right now? You said Q1 was impacted by pricing. Rainfall came 20 days before. What has been Q2 demand so far? Because there are different segments that you cater to, be it agri, be it urban. Can you give us a sense of demand on ground in different segments?
In Q2, demand generally for agriculture segment remains low, but demand from housing is quite well maintained. We are anticipating some demand coming from infrastructure. So second quarter business will have much better volume growth compared to previous year second quarter.
Okay, Mr. Taparia, so you've said that demand in second quarter should be much better than Q1. A couple of questions. Can you, confirm to us that since May, companies have actually been taking price hikes, and we believe that the latest price hike was in the range of 1.3 rupees per kg for the PVC resin space. Could you confirm that? And going forward, what is the outlook as far as pricing is concerned?
We believe PVC resin prices have reached bottom. Many suppliers are bidding to sell at the current price. We believe the bottom has come, and government is also working on getting anti-dumping duty imposed. If that happens, then PVC prices may rise also.
Okay. Mr. Taparia, you mentioned anti-dumping duty. Two important things that the street was working with and was keenly awaiting. Number one was the implementation of quality control as well as the BIS norms. We understand that that has now been deferred to December 2025. And secondly, what is the status as far as the request for anti-dumping duty is concerned? Where are we on that?
Now, in the BIS, as you rightly said, it is extended up to December. We are not sure whether it is not going to be extended. It may be extended for further 6 months. But local production will be augmented only by end of calendar year 2026 or first quarter 2027 calendar year basis. On anti-dumping duty, government very recently announced a disclosure notice by which showing how much injury has been caused by the respective exporter to India, and this is the harbinger of the thing going to come when final rate of anti-dumping duty, which DGTR will recommend, may come in the month of first half of August, and thereafter between 2 to 3 months, the Ministry of Finance may issue notification of imposing anti-dumping duty based on the guideline given by Director General Trade Remedies.
Got it. Okay, so we'll be watching out for that. That's an important notification that the street is watching out for. You're maintaining your volume growth guidance, you're maintaining your revenue guidance. How are you getting volume growth versus your peers? Is it discounting? Is it some other measure that you're adopting? And also, have dealers started restocking now, sir?
Now, there is no destocking anymore because destocking took place big way last year. And with the PVC resin coming to a reasonable level, and the trend is a future after 2-3 months, prices may start going up, and the demand is expected to be quite brisk because the rains are quite good. So demand for agriculture also will come up. Housing demand will be better, and infrastructure also will be better than last year. So demand is going to be better also. So with the effect of demand going to be better and small restocking, we anticipate that this year the volume growth in plastic piping division will be between 15 to 17%.
Okay, Mr. Taparia, one last question very quickly. We wanted to understand what is the final decision when it comes to the injury caused to the domestic sector when it comes to anti-dumping? And did you say that by August we may see some anti-dumping come by? What will be the impact for Supreme if it does happen?
Supreme Industries, after the local prices go up, then we will be able to pass on the increase. We will have no difficulty.
Thank you so much, Mr. Taparia. We would have loved to have a much longer conversation with you. Thank you so much, and we wish you all the best for the rest of FY26. But with that, it's all the time we have on this edition of Midcap Radar, Mutual Fund Corner, when we return.